Hi guys, welcome to my video. In this video we are going to learn about the difference between cash and futures. This is the part 2. In case if you have not watched the part 1, do not miss it. First watch the first part, then come to this second part. Okay, so here we are going to discuss two things in this second part. So one is why futures you need to trade, which is compared to equity. Second is what are the advantages or what are the disadvantages, or you can say what are the precautionary things you need to take when you are taking a trades in futures. This is very important. The risk part, which I'm going to explain you today. What are the risk factors are there in futures trading? Okay, so let's get in and understand about part 2 in a better way to understand why you need to take a future trade. Okay, see, in my last video we had discussed on Asian Paint. Asian Paint was the stock which was trading at 3129 actually, and I said that it is going to go up, Asian Paints, and today you can see the current market price is trading at 3222. Okay, so the stock has moved up. Okay, so what are the things we need to watch to predict the trend? One is a super trend, which I'm going to add here. Super trend is again you can say it's a default settings. Okay, so super trend 1. Okay, the trend is super trend on a daily chart shows a positive, and second I'm going to add averages. So average, you can say one is exponential average of 10 and exponential average of 20. Okay, so here I'm going to change the color for 20. Would add it here. Okay, so these are the simple ways, and from this was showing here, you can see. So trend was positive, super trend was positive, and 20 days exponential moving average was also positive, and crossover was there, positive crossover, and price was trading above 20 days exponential average. So that is the reason I took up trade in Asian Paint. Okay, so here in futures, as I told you, what is the advantage? See, if you think that the price is going to go up, you can take a long trade, you can buy a futures. If you think the stock, which is, you can expect that stock is going to go down, okay, so you can go short. That means you can go and sell. So the sell a future contract. Let us assume so you are thinking that the stock is going to go down in next few days, so you can go short on that particular stock, that is sell here. Let us take example. So you can go short here. Okay, you can sell it. So that's you can sell here at 1000, let us say 1080. you can sell in next few days. If the stock goes down, you buy it back. Hope it is clear for you. So you can either go short or you can go long. So you have both options, but risk factor is very important in futures when you are taking a trades. Okay, so let's understand much more on this. The terminologies what we are going to learn here is mark to market. What is this mark to market? So mark to market is on a daily basis, whatever the margin shortfall is there, or whatever the margin is required, you need to maintain it. So as I shown you last time, in case if you want to take a trade in any stock, and if you want to take any positions in the future positions in any stock or index options or futures, sorry, so you want to take positions, so you need to keep a sufficient margin. Okay, so in case on a daily basis, whatever the profit and loss will be added here. Let us assume that I will just show you an example. So if you have a position So let's understand in detail my previous positions which I took it on last week in my part 1 video. Okay, so Asian Paint was the stock which I took. Okay, and my buying price was 3129. Okay, so and what is the current market price? Current market price is 3223 is my current market price. Okay, so what is the profit I got it? I got a profit of 94 points. Okay, so here I have calculated 94 points. What is the lot size? Lot size is 150. So 150 into 94 is the points which I got it. So my profit is 14,145 rupees. Okay, so let us take example here. For my position, whatever I had the margin required was let us take 90,000 rupees. I got additionally 14,000 rupees added here. Okay, so then what will be my value in my account? So I will be having that is this plus this. Okay, so I will be having in my account 1,03,817. So what happens to the person who has done a selling? Correct. So in case a person who has sold, I have bought it, right? Somebody has sold it, so that contract is there. So the person who has sold, he is having a loss of 14,000 rupees. Correct. So he need to add 14,000 rupees to his account. You got it? So in case I am a buyer, I got a credit of 14,000 rupees. If I am a seller, so I will be having a loss of, that is 14,145 rupees is my loss. So I need to add it to my account. So this is called as M to M. So this you should maintain on a daily basis. So in case if I got a profit of 1,000 rupees that day, a person who has sold it, he has got a loss of 1,000 rupees. So he need to add 1,000 rupees to his account. So, and I will be getting that credit on a daily basis. So this is what is mark to market. So my debit and credit need to be maintained on a daily basis. This is very important when you are taking a trade in futures. So let us take example what I said. What is the advantages over cash? See, simple one more example I want to give you. Hero MotoCorp. So let's test my I told you the trend is showing in Hero MotoCorp. You can see here. So here in this particular day, my trend is showing a super trend is showing a downside. Okay, and the price is closed below 20 days average. Correct. So the price is closed 20 days exponential average below this, and the crossover is a negative crossover. Can you see here? So all the three indications are showing a sell. So what I can do is I can take a future positions in Hero MotoCorp. I can go short here. Okay, I can, if I think even I can go a short here at 2574. So if I went a short here, I can cover any days till here. The trend is down only. Clear? So you have got. So let us take an example. You are shorted here at 2570. Let us take example. And what is the current market price? Current market price is showing at 2357, even 2350. So you got almost here a 200 points profit. What is the lot size in let us take example Hero MotoCorp. What is the lot size? You can see here lot size is 300. So 300 is the lot size. So you have, let us take an example. So I'm showing you here 300 is the lot size, 200 rupees is a profit. So you are getting a profit of 300 into 200 is the points, right? So 60,000 rupees profit you have made. Okay, so see, this is what the advantages over taking a trade in futures. Okay, so what was the margin required here? So if in case if you want to go, you want to take a position in cash, so you need to have a higher capital, right? So here you see you need to have just 1,67,000 rupees is required. So 1,60,445 rupees. So approximately 1,70,000 rupees is required to take a 300 quantity. Okay, so this is the advantage where you want to take a future position. But only thing is that your view is wrong. If instead of you taking a position in long short side, if you are taken a buy, then you are if you have gone a long, the person who has bought, he is losing around 60,000 rupees is the loss. So this is a contract. So one person is making a profit, other person is losing money here. Okay, so hope it is clear on this part. Okay, so then coming to the next part, so that is margin shortfall. See, that is very important when you are taking a positions in futures. So what is NSE says is, we can see here, so in NSE website it is clearly mentioned the margin shortfall. What I said is, so here you can see, so I told you margin required per lot is 90,000 rupees. So you have to maintain this margin on a daily basis. So in case if your position goes a negative that day, if you not added the money, so the penalties will be really very high. Okay, if you are mark to market, the violation, that is you have got a negative loss of below 1%, that is below 1 lakh rupees, then you need to pay 0.5% as a margin shortfall. So 0.5% is the penalties you are going to pay on the shortfall. Okay, in case if your margin shortfall is above 1 lakh rupees, so in case if you got a margin shortfall, you instead of keeping whatever the margin required amount, if you are not kept it, so in case if the stock goes under a drastic fall or rise, so you are lost. Let us take your margin is reduced here, and you have got a debit of 1 lakh rupees. Okay, so your penalty will be 1%. Okay, so 1% penalty you will be charged, and if you continue that continuously for 3 consecutive days, if that whatever the violation penalty was there and whatever the margin shortfall was there, and it continued for after third day, so your penalty will be 5%. Okay, so in NSE website only it is clearly mentioned 5% will be the penalty if you are keeping a debit. So that is, you should always check in your account. So your margin should be kept little bit higher only. So advantages for you, so that the margin penalty will not be charged for you. Okay, these are the 2 important things you should keep it in your mind. One is mark to market, you need to add on a daily basis. Second is make sure that you have a sufficient margin in your positions. And this video is helping you, and I want to thank you all for watching my videos, and do subscribe to my channel, and also share it to your friends. Jai Hind, all the best for your trading.